Check, mic check. Alright, so this is GBP USD and currently in a sell. And pretty much based on the current market structure, I think that we can continue to push bearish, because we have a area of consolidation here. This is our area of consolidation, and as I can see, price actually broke the area and closed below our support right here. Alright, so what does this mean? And again, we have clean candles here to the left that we can actually mirror all the way back down. So this is actually my confirmation, and if you look at the time now, we are leading up to London Open shortly. So at this point there should be some form of volume coming into the market so we can get solid continuation. Alright, so this is what I am looking at now for GBP USD. So I think once price can respect the support we got right here, once price can respect this support, and we don't get a candle to break and close back above the support, then I think the potential is there for us to continue to push bearish. Alright, so just have to be patient. Pretty much I didn't really like how the market was moving yesterday. It was a bit choppy, but I think if we start to break down to about here, then we might get some continuation. Alright, so I think we can continue to push. We should continue to push bearish still, so I'm not really worried about it based on the confirmation that I got. I will be managing risk if I get a candle to actually close back inside of the range. So I think we should continue to push bearish. Just a moment. Alright, so we have now broken the low. So at this point, there's a very high probability. And one of the things I was also looking at, if you notice here, this candle, we don't have a top wick, and we don't have a top wick here. So this simply means that, there is a lot of bearish pressure in the market at this time, because whenever you see a candle with no top wick or bottom wick, it simply means that there's a 50-50 chance price will continue to push in that direction. So once we continue to respect the high here, just the same, like this candle, then we can continue to push bearish. So TP1 is right here at 10 pips, and then gonna secure some position, and then I'll leave the rest to run. But if I get a 30-minute candle to close back inside of the range, I'm gonna close 50% of the position in managing risk. Alright, and take for example, if this current candle that that we got now, if it starts to break above here, then I'm just gonna close 50% and leave the rest to run. But enough confirmation is there for us to continue to push bearish. Alright, and the idea again is to always mirror clean candle movement. We have two nice candles right here, and we are now out of this area of consolidation. So ask yourself, why is price leaving this area now? We are leading up to London Open within another hour, and at this point there is some form of volume in the market just the same. Alright, and if we look at the DXY right now, which is the US dollar currency index, and this is the US dollar standing by itself, what you notice right here is that we are pushing bullish. Alright, and if we also look at other pairs, take for example Euro USD, what you notice with Euro USD right now, we are pushing bearish. If you head over to gold, USD, what you notice right now, we are pushing bearish. So more than enough confluence is there for me to actually take this trade. So the only thing that I'm worried about now is just to manage risk. All right, if you look at NZD, USD also, what you notice, the current market structure is bearish, or pushing bearish. So again, more than enough confirmation is there, so we should continue bearish. But at the same time, you always have to think about how you are going to manage risk if the market start to push against you. And if you look at Euro USD, what you know, USD JPY, what you'll notice here again, we are pushing bullish. What this means is that the US dollar currently is strong. But when you look at currency pair, we have what we call the base currency, which is the first currency, and the code currency. Now in this case, Euro USD and Euro USD, the US dollar right here is actually the code currency. All right, so that's the reason why the market is pushing down. So when you see the market is going down, it simply means that the code currency is stronger than the base currency. And whenever the market is going up, it simply means that the base currency is stronger than the code currency. So that's the reason why I see gold USD is going down at the moment, because the USD is strong. If you look at NZD USD, we are pushing bearish because USD is strong. If you go on AUD USD, you will notice the same thing right here. All right, if you head over to USD CAD, as you can see here, the USD come before the Canadian dollar. What is taking place here? We're actually pushing bullish. So what I'll be doing is just to manage risk if I start to get a candle to close back above, support back in the range, or if it start to break above here and just leave the rest to run. But I think enough confirmation is there. So let's see how this will actually play out. And overall this is like a 17 pip stop. I keep it above this level. It should be pretty safe. And I mean, if we are pushing, if we should continue to push bearish, then I don't think that price should break back above here. So if we are going bearish, I don't think that price should break back above here. So let's just wait and see how the market will print price. So really have to manage risk, because in the forex market, guys, trust me, like if you don't manage risk, you're gonna have difficulty maintaining profitability. So if you notice here, the risk to reward is 2 to 1. All right, so I'm risking 1 to make 2, but at the same time, while I am risking that 1, if I can lose half of the 1% that I'm risking, or the 1% risk that I'm risking, that would be good, because at the end of the day, you are risking 1 and you only lose 0.5. That's managing risk, and sometimes you're just gonna get in a trade and the market will just push, while there are other times when you get in and it might take 30, 40, even 50 minutes or an hour and a half to play out. So you have to be patient with the market, and at the same time, you have to manage risk just the same. Let's look at it on the 15-minute. So on the 15-minute, if you notice here, if you look at the candles here, we are breaking down gradually just the same. Farm support, farm resistance. This candle break below the wicks right here. So I think we just need some volume to continue the push. But if it closes back in the range, I'm just gonna knock off 50%, in managing risk, and just see how it actually play out. Risk management, very important when you're trading the currency market. Person might see the trade going against them and they don't want to close any percentage and they want to hold a full drawdown. Yes, you can do that at times. Take for example, I sent this trading idea in the premium group. All right. The only reason why I didn't took this buy, I was actually in a buy on gold, you know, and because of the margin and stuff like that, I wasn't going to put another risk on the board, So if I had taken this trade, then 30 pip stop loss. Overall, my target is 114 pip. I think that we can actually push all the way back up to here. Might take a day or two, but you're risking, 30 pips to make 100 pips here. Risk to reward ratio here is 3 to 1. So if I've took this trade, I would have been okay getting stopped out at max risk, because when I was looking at it at the time, it makes perfect sense. We have a low here, we create a high, we have another low, we create a high, and we pull back to, create another low. So I think it was somewhere here, and the idea was sent out for entry here. And as you can see, the market push up well. So the overall move on this is 74 pips so far. So you have like another 30 something pip to go, thereabout. And overall, the drawdown would have been 22 pips, and you would have been risking, 30 pips. So pretty much price wouldn't have hit your stop loss. And this is based on a, day trade, swing trade idea. It was based on that. So trade like these, I'm okay with getting stopped out at max risk, but because this week has been pretty difficult, so I'm really, really being strict with risk management. I'm not gonna jump in and jump out. Like so far, I think I took probably about three trades or four trades. This probably might be the third or the fourth trade. So I'm not gonna jump in, jump out, jump in, jump out. Still in a bit of profit for the week, just the same. I had to manage risk on Monday, got stopped out at break even yesterday, and I think I had these gold buys here, hold the drawdown, and I think I exited here this morning. So that's what actually bring me back up. But yeah, you just really have to be patient. You just really have to be patient in the forex market. So let's see if we can get that little push to continue. Seeing that we would have created a top wick and we break the low of the previous candle on the 30-minute time frame, which gives strong enough confirmation also on the 1 hour time frame. I'm looking at this on the 1 hour. I don't really trade on the 1 hour, but it makes perfect sense to look for sell once candle, close below this H1 support. But I was looking at this wick right here and stuff like that, and I said, okay, 90% of my trades are executed on the 30-minute time frame, and I also add the support here. So I said, you know what? Let's just wait for the 30-minute candle to close below support, and then I'll look for a potential entry. So if we continue to push, we can make some pips, but if not, we just have to manage risk, and we'll see how it goes. So the original entry is here, guys. I got a entry at the pullback, probably about here. But if you are going to take a sell now, then you can keep your stop loss probably about here at 13 pips. You can keep it here because at this point we don't need a candle to break and close back in the range. So take for example, if you are going to take a sell now, all right, and if the candle start to break above here, then what you want to do is to just manage risk by closing a certain percentage and leave the rest to run. Because remember, whenever you enter a trade, you are entering the trade with the anticipation that the market will continue to push price in your direction. But at the same time, you are risking a percentage or a certain amount that you are okay with losing. Managing risk will even make it better because you will actually lose less than what you intended to. So if you're going to take the sell here, you can keep stop loss here above this 30-minute candle. The number is 1.41633. And if take for example we start to break here, you just close 50-60% and just leave the rest to run. But this week has been pretty difficult, so let's see if we will get that push. I was looking at this. I saw this play a bit late, in all honesty. I saw this play a bit late. As you can see here, we consolidate. All right, we consolidate in this area. And if you check the time again, leading up to, you know, London open in another 30 minutes, price break and close below our support. We have clean candles here to the left. We can actually mirror all the way back down to this support, and if we get continuation, we can actually get a wick fill right here, you know. And so far it has moved, I know it should be over 10 pips, because if we took the entry here, you know, it's about 11 pips. 11 pips. So far it has moved 11 pips, you know, so that's that. GBP AUD, I think there is still potential buys above this level. As you can see, we are in a tight area of consolidation. You know, this did a bit of fake out this morning, close back in the range, and then, you know, we start to break up gradually. Which other pair I was looking at? I was looking at Euro JPY this morning as well, but it was a bit rangy, in all honesty, and the 30 minute, and even on the 1 hour and the 4 hour time frame, we are in a mess, you know. But I was just looking at the fact that we had a nice clean candle here, and this candle actually break and close above this resistance right here. So I was saying, okay, you know, stop below the level and we can continue to push up. So it take profit one, which would have been here, you know, but as you can see, the market is currently struggling. So I don't think that there is any good trade on Euro USD until we break and close below this level right here, you know, 33.650, or above this area right here, this resistance here, you know, 134.100. Because this right now is messy, in all honesty, but I think if we can break out, then, you know, we have nice clean candles here. We can actually mirror pushing back to the downside, and, you know, if we start to break and close above, all you have to do is to just go on the bigger time frame and identify potential targets based on the daily time frame, or even on the H4 time frame, you know. So looking here, you will see that we have a wick right here on the daily time frame, and if we break there, we have another level here also at a support. You know, let's use this support here, and if we break the support, then you can say, okay, we can push all the way up here, and then, you know, you just go back to your left to identify the levels. And this is based on the daily time frame. All right, now looking at it on the daily time frame, let's go down to the 30 minute. So you see that it lines up perfect, because if we get a candle to break and close above here, you know, we will be trading above resistance. And you know that on the daily time frame, we actually have clean candle to push all the way back up to here, which is about 75 pips. So I think once price leave this area of consolidation, there's a very high probability the market will continue to push bullish. But if we start to break the support, you know, take for example here, then we can mirror this move back down, you know, to about here, which is more than big enough. You know, so this is like a 38 pip move. So let's see. So I think we should be up a few pips now. You know, so let's hope we get that nice little continuation. So hope we get that nice little continuation, you know, four pips, you know. And also, so for a person who took the sell here, if you go about 5-6 pips in profit and it pulls back to your entry, you can close 50% of the position. You know, because this week is pretty tough, guys. In all honesty, this week is pretty tough. It's not the best trading week, you know, so I'm not gonna really hold any big drawdown or anything like that. You know, I'm just playing it as safe as possible. Very, very important. So, yeah. See if we can get that continuation. But I mean, for me, once we don't get a candle to close above the level, once we don't get something to close back above here, then I'm gonna hold my position. And, you know, even if we get a candle to farm support right here and close against me, once the next candle don't close back in the range or break this level, then I'm gonna leave the entire position to run. But in managing risk for me, if the candle close above here, knock off 50%. If I get a candle to start break the high here, close 50% and just leave the rest to run. So that's how I plan to manage risk on this trade. GBP, JPY, pretty messy. Pretty messy, so I'm not gonna touch this right now. Better buys, you need a break and close above, 155 500. You definitely need a candle to break above 155 500, create a lower wick, and then you can actually focus on these clean candles right here. All right, and again, this is more than a big enough range, so you can get a few pips out of this. For now, I'm gonna watch GBP USD. Yes, so the DXY is pretty bullish. So I set an alert here because we have a resistance. And as you can see, we are pushing bullish, so this simply means that, the US dollar is extremely strong at this point. So it is pretty much pulling the USD bearish because again, we spoke about the base and the code currency. Right now, the code currency is strong, which is the USD. So that's the reason why I see the market is pushing bearish. So I think we should be able to get 10 pips. So in managing risk, guys, if this actually pulls back to your entry, you would have been up 5.5 pips. This pulls back to your entry. You can close a small percentage and just leave the rest to run. It's not the best week, so you really have to play it as safe as possible. I'm looking at this, if we can respect this level. At some point, the DXY will actually pull back. Just to say, the market not gonna push, but if take for example the new 30 close above here, then it might push all the way up to here. So I have pretty much had an alert here, So if we break, then we can push up. But I think if we close above here, then this would be the next level for reaction. All right. So I have an alert here as well. So if price hit this area and form, some form of resistance, then you might get some form of retracement for price to continue to push bullish. So just manage your risk. If you're seeing that it is pulling back to entry, you want to close 50%, that is up to you. But, if it start to close back in the range, that's how I'm going to manage my risk. We need a nice little push. Yeah. Nice little push. Week has been pretty difficult. You know, this pair moved nice, but I see whenever it starts to range, it's pretty messy. Pretty messy whenever it starts to range. GJ, just to see him chilling out. No gold. I think for gold, just leave if just leave gold for now. Cause I think we have NFP on Friday. I think we have non-farm payroll on Friday, you know, so just leave gold for now. Calendar. Should be out of the market by then. So we have, you know, so CAD, we have some news for CAD. We have also NFP 8:30 Friday. You know, so the thing with NFP now, the previous number was actually 200 and something K, 260K, 66K right here. You know, so what they are actually doing now, this is what they are forecasting. So they are looking at 645K. Now, if it really is close to this number, you might see a push down on gold USD because the previous was pretty, you know, bad numbers. So it drive the market up. So seeing that, you know, they are getting some good numbers here, then there's a very, very high probability the market will push bearish. But again, for a person who don't really have any experience trading, you know, news, you know, I would say I need at least a year experience. Just watch how price react when these numbers are released. All right, so you can actually go back and look at the different numbers. All right, and look at gold. Take, for example, you can go back on January 8th and look at gold at 8:30 a.m. Look at the number they were actually forecasting. Look at the number that they actually released and look how the market react to this data right here. You move up to February just the same. Look at the number they were forecasting. Look at the number they released and, you know, how the market react to it. You know, so as you can see here, 49 bad numbers. All right, good numbers in the green. So the 916K simply means that the US dollar is strong. So gold should be pushing bearish. So what you have to actually do with the news, all you have to do is to just look at the date and the time when the news was released. You head over to your trading view and you go ahead and look at how the market react to that. All right, so I think the last May 7th. So all you have to do. The previous was 990K and we had 266K and this was May 7th. So all you have to do, just head over to trading view, find May 7th. That's all you have to do. Your daily time frame. All right. So you see a daily candle here May 7th. What happened here for May 7th? You know, look at how the market react to the price here. Gold actually push bullish because it simply means that the numbers are actually bad for the USD. So that's the reason why the market push bullish. Let's look at April 2nd. 916K good numbers. Let's look at how gold USD actually react to this. So April 2nd. Where is April 2nd? April 2nd, yeah. Daily time frame March, April 1st, April 6th. No, it's April 2nd. Got April 2nd, which date was that? April April 2nd was a Sunday, so it would have been it would have been the 7th. It wouldn't be released on this date. Would have been released on this date. But anyways, all you have to do is to just go back and look at the numbers and look at how the currency react to these numbers when they are released. All right, and then you can get an idea to actually plan ahead based on using buy stop, sell stop, or whatever the case might be. Because for NFP for gold, pretty much it is played using buy stop and sell stop. Very, very risky, but you're gonna need some form of experience in order to actually trade that. I think we are struggling at this moment. We are struggling. So once you don't close back in the range, then just gonna leave it. And when you're trading the currency market again, guys, sometimes you're gonna escape drawdown, yes, but about 98, 99% of the time, drawdown is inevitable. Like when you enter the trade, some like maybe 1% of the time it's gonna shoot straight in profit, but drawdown is inevitable. So risk management, how much percent of your account you are going to risk. That's the first stage in risk management, the percentage of your account that you are going to risk. And then, the second is look at how to use static and dynamic risk, meaning if you want to use a fixed percentage or you want to add multiple position, and then, risk management 3.0, how to cut losses short. All of these are covered in the TME course. And once you can effectively cut losses short, trust me, you are in for the money. So I'm not really paying much attention to the 15-minute time frame. Weak confirmation, I'll stick to the 30-minute time frame. Once you don't close back above the range, then I think we should be good. And what usually happened to me sometime in the past, close a trade early and then the trade end up pushing my direction. So after you manage risk, then you just can leave the rest to run. After you manage risk, close a certain percentage, then all right, I'm gonna leave this to run because again, you enter the trade being okay with risking your 1% or your 2% or your 0.5% or your 1.5%. So once you manage risk, then you should be okay with what remains. The 1 hour candle I reject here. As I said, the thing is we have a 1 hour resistance right here. Let's see how it goes still. Let's see how it goes. need some volume. Need some sort of volume to continue to push. Alright, so pretty much I'm gonna close 50%. Don't like the way price is moving. So I'm gonna close 50% and just leave the rest to run. The confirmation is there. So even if it's a case where I'm gonna get stopped out, I'm not gonna get stopped out at max risk. Because the thing with this candle now, it becomes a volatile candle, breaks the low of the previous candle, and it also breaks the high. Alright, we have another 5 minutes and it starts to pull back in the range. So instead of closing the entire position, I'm just gonna close 50% of the position and leave the rest to run. Alright, and if I get stopped out, might look for a second trade, but if not, then I'm just gonna call it a day. So pretty much cut the risk in half. So if price should hit my stop loss now, I would actually lose less than what I intended to. But for me, the confirmation was there based on the current market structure. But then again, you're not gonna get every single place. So you just have to manage risk. The next candle can open and just continue to push down. Alright, but I see the need to manage risk at this point, so I'm just gonna manage risk. I've seen that to actually, push down here and start to reject and pulling back inside of the range, then, I think for me it is now necessary to manage risk. Just leave the rest to run. So pretty tough. And this week has been a pain in the butt. Damn. Pretty difficult. But I'm just gonna leave the restaurant. I'm not gonna close the entire position. I'm just gonna leave the restaurant. Gonna leave the restaurant. And I think this pull up is based on, because we're gonna have the London Open in like another minute. So let's see how price actually reacts to that. And if it closes like this, then again, we still would be closing below the support we got here to the left. We still would be closing below the support here. The XY, I reject the area. So the 1 hour, it's like a doji close. Slight bearish, just the same. This still did not break the high on the previous 1 hour candle. But I would have loved a stronger bearish close. Even if it would have closed here, then I would say, you know what, but seeing that I manage risk already, I'm not going to close the entire position. I'm just going to leave the rest to run to see if we can continue to push bearish. If not, I might look for another setup in NY to see what is up. But this week has been pretty difficult. And whenever you get weeks like these, it doesn't make any sense to go around to try and show trades here and there, here and there, You just have to play it safe. Because last week was a way better week, but market just moving a bit sketchy. This was a nice place still. Again, it's the same setup like this, based on the fact that to break and close below structure here. It's the same setup. So whenever price starts to go bad, all you have to do is to just manage risk. But if you look here on EURUSD, farm support, price breaks and close below the area, clean candle to the left, overall target. But for me, I will be looking for buy in this area, down in this area. I'll be looking for buy, and this is based on the bigger time frame. Manage risk at 9 pips. Stop loss 17 pips. Yeah, and just leave the rest to run. I think if GJ breaks here, you might continue to push bullish. But you definitely need a break above here. Come on and give us that push so we can hit 10 pips. Come on and give us that. see if we'll continue to push. Let's see, X, Y. I think you just need a few more. But I think we should be able to get 10 pips. And if it continues, then, we can gain some more. So a break off the low here, then we should continue to move down. It look like so we now get no volume. Nothing now go on. Go on at all. Eh, push down. The farming support. Resistance. We just have to wait and see, guys. But I'm gonna hold the position regardless. And I'm not gonna close it. So if we can get that push, then we can secure some profit and cover the percentage that actually got closed out. Not getting any solid move now. I think within the last 15 to 20 minutes of this current hour, then we might see some move. Wick up, wick down. Yeah, let's see. Still watching it still. You know, the market, no volume, and I get no volume. Confirmation is there, but price now move. Just not moving. We're at a solid level. This entire area. Resistance, support. You know, and the new H4 candle, we have, you know, 130 minutes. This could just be the bottom wick, but you know, I'm just gonna leave this. Just gonna leave this. Think if it close like this, I'm just gonna probably just get out the trade if it close like this, because I see at this point price will be closing back in the range. You know, this candle forms support, and then within another minute this candle, there's a high probability it will close back above support. Very high probability. You know, but the confirmation was there for us to continue bearish based on these two candles, price breaking and closing below structure, and you know, London open, but we're just not getting the push. You know, so I'm not gonna risk it. One interest minus 10 pip. I'm gonna close, guys. I'm gonna close. If I see anything else, if I see anything else leading up to NY, then you know, I'll notify the community. But I don't like the way our price is pulling back, and at this point, there's a very high probability, you know, we're gonna continue to push bullish, seeing that price close back above support. And so I close my position. I close my entire position. So overall, I was risking, you know, about 150. And the loss is $60. I think I got a entry on the pullback. I got an entry on the pullback at 533. 533. My entry was at 533. So my entry was right here. Alright. My entry was right here. So overall again, this would have been yeah, about 140. About 140 based on the entry. And I lost 60. So I'm not gonna jump in a buy because price closed back above the area, you know. I'm just gonna wait to see if we can get any other confirmation to enter a potential trade. But I'm just gonna call it for now. All right. So as you can see here, full position was closed, at 9 pips. So you basically save yourself 7 pips right here. All right. And bear in mind that some percentage was actually closed here before. And as I can see at this point, we are pushing bullish. So seeing that this candle break structure, close below support, and then we get this candle to close back above the area, fake out. The probability is there for us to continue to push bearish just the same, because if you are looking at it, let's remove this drawing. All right, if you are looking at it from this support area, that price actually broke out of. All right, this could just be a low for price to pull back, to form resistance, and to continue down to retest the low. And with continuation, we can do the same and continue to push bearish. But I close the position and I'll just wait and see closer to NY if we can get another setup and just manage risk accordingly. But this week is pretty difficult and I'm not gonna jump around in the market because that's not how trading go. I wait on solid confirmation and I execute and manage risk. Two beautiful candle right here. We did not get the push. Price gave us the confirmation and it closed back in the range, So I just exit the trade. If it continue to push, it is what it is. But I don't like this. So I just have to manage risk. As you can see, we are pushing bullish. So for GJ, if you feel a need to take GJ with a break and close above this area, I think the potential is there for us to continue to push bullish. I think the potential is there for us to continue to push bullish. I'm just gonna leave that as it is. Yeah, pretty much a farm resistance right here. So this reaction level, the US dollar is just reacting to this resistance right here. As you can see, we form, resistance at resistance. So there's a high probability the market will pull back. Take for example, if we should continue to push bullish, then you can expect the market to pull back, to form support, then continue to push bullish to retest the high. Week has been pretty difficult, man. Difficult, but week like these, you just really have to take it slow. Just have to take it slow. And don't be that trader you suffer a loss and you try to make it back instantly. That's a common mistake new trader make in the forex market. You lose $2, $5, you feel the need and the urge to make it back instantly. So at that point you're actually losing sight of what you should be actually doing. Okay, you're just gonna be buying and selling randomly because you think that price will go here or there, and you're not doing any quality setup and look for good, place to execute on. So whenever you get a loss, you just take a breather, step back, look at it, and then you just move forward. So this is a minus 10 pip. The end of the week, I'll be going over these ideas. I'll go over about these trades. say you have to be disciplined in the forex market. So I'm not gonna take 10, 15, and 20 trade in one day. You know, what I'm doing now is to just focus on two quality setups for the day. Two quality setups. If I can get that 5 days out of the week, that week, that's actually 10 trades. All right, 10 trading in a trading week is more than sufficient. You know what I'm doing? The confirmation was there, and price closed back inside of the range. So, you know, close position. You see Euro USD at this support. But you know, for this, I'm still looking for buys here. I just missed this buy this morning by about 4 pips. I was just actually waiting for price to hit the zone here, 4 or 5 pips. You know, I actually missed this buy from this morning, and this is based on the fact that, you know, price has been bouncing from this level. You know, so you one touch, two touch all the way out. And as you can see, we are currently trading in this channel where we are creating highs and low, bouncing in between. So what I wanted for price to actually did was to pull back to retest this trend line here to get a potential entry, and stop would have been below this H4 support, you know, and it would just be trading with the trend, because at this point, if we are pushing bullish, you're not really expecting the market to wick all the way down here to break this support, because the overall structure of the market is currently bullish. So even if I get the trend line and I stretch it all the way down here, what you will notice is that, you know, the channel is still bullish. This is a channel we are trading in. All right. We are creating highs, the low point, the high point, the low point, you know, the high point. Let's say I have a low here, I have another high point, low point, we have another high point. What I wanted was for price to bounce from this area, which would be this trajectory, and then we can say, okay, take a buy here for price to push back all the way, you know, to the top of the trend. So this is what I was actually looking at this morning. But again, channel is bullish, so I feel more comfortable taking buys. For sells for me on this would be short term, unless we start to, you know, break and close back below this level. Then I can say, okay, we are below this daily resistance here and also this daily support, so we should continue to push down. But if we are not getting a strong H4 candle to close below this area, then I'm not really interested in any long-term sells. You know, so even if I saw this at the time, it would just be a short-term sell, just to probably get price to here or all the way down here, or to the buying area to actually buy it back up. I don't like when the market moves like this. Therefore, it's perfectly fine. So even with gold right here, same idea. Clean candle here. Idea would be to mirror these candles. Break and close below support. What happened? Will drop. So in order to combat fake out, if you get candles start to close back above the area, you just have to close some of your percentage. If it continues to move, it is what it is. But it's always the same idea. You need to get price away. Even though we have a bit of a mess right here, but we came down and we push all the way back up with no problem whatsoever because we have a clean candle here. So we mirror the move back up. Price came back into this area, we consolidate, we break support that was created here. What happened? We actually mirror these candles right here. All right. So whenever you see clean candles like these, there is a very high probability in high volume time, the market will actually mirror these moves. But you need to get that confirmation. So you can see it is pushing back down. But price, we're not getting any volume at the moment. Even if you look at the time now, London time. You see, it is 8:47 and London open is actually at 8. So if we don't get any volume now, it might be at 9:30 London time. If you change the microphone here, I like how it sounds on YouTube. Yeah, the confirmation was there, but the market do whatever it wants to do at times. So as you can see now, it's actually forming resistance, but I'm not gonna get back in. I'm not gonna get back in. I'm not gonna get back in. But this is my ideal trading setup. This right here. Wait for price to break the structure. create a top wick, break the low of the previous candle, get in the sell. Alright? The idea would be to mirror these candle all the way back down to support. You know? So if price decides to do a fake out and close against you, what you will have to do is to just close some of your percentage. But based on the fact that, you know, one candle form support here and another one close back in the range, and I said, okay, you know, there's a very high probability I'm going to get stopped out at this point. So I just close the entire position. Are we gonna get that 10 pips now? So if the market continue to push down and it take profit one, all of this pullback here closing back inside of the range was totally unnecessary. I'm not trouble it. I ain't gonna touch it. Ain't gonna touch it. But if it close strong like this, then we should continue to push down. But you know, I'm not trouble it. I just done break my heart already. I'm not gonna trouble it. Cause seeing that we farming support here, this would be closing below support just the same. You know, but all of this pullback here, all of this pullback here to here was totally unnecessary based on what I was looking at the time. Based on what I was looking at all the time, all of this pullback closing back in the range, and then you're going to close back outside of the range, farm support here, and if this candle close below support, then you know we should continue to push. But at this time of the morning, is either higher. We should have gotten 10 pip already. But I guess it's due to low volume at the time. So, you know, I'm just gonna wait for NY. Wow, got that. Still no volume as yet, no volume as yet. Right, this is pretty slow for GU at this time. This is pretty slow. Yeah, this is extremely slow. Still no volume as yet, no volume as yet. This is pretty slow for GU at this time. This is pretty slow. I think we should continue to move still. Based on the fact that to create support and price break the level. So once you break these wick, then the overall target, you can look for price to push down to this support and then a potential wick fill. But I'm not gonna touch this right now. I'm gonna get back on the chart at about 6:30 to see if we can find any quality setup. Sorry, so me never gonna see this late. Like looking at this on the 1 hour time frame. This was a clean move. Yeah, 23 pips. I'm gonna sign off now, guys. I'm gonna try to see if I can get 2 hours, and then see what's going on for about 6:30 there about. So I'll see you guys then.